Many investors have been concerned about inflation lately. For the last 40 years or so, we might not have to worry about it because we managed to keep it around 2%, which is ideal. Investors like Ray Dalio, Charlie Munger, and Michael Burry have all cautioned that inflation may be on its way. That might lead to a nation like Venezuela being ripped apart by inflation if too much money is printed, Munger said. As Michael Burry once stated, history is not worthless. A look into American inflation in 1970s, which is more important now than one would believe, is covered in this article. According to Dalio, inflation pressures are on the rise now that the economy is recovering. Inflation is being warned against not just by these specific investors, but also by well-known investors all around the globe. Also, I'll show you some data that indicates that inflation may be an issue in the not too distant future. However, the most important thing we can talk about is how you might benefit from inflation. A lot of people are going to die as a result of what's to come, and I'll tell you why. Preparation is critical. Here are some red flags that we've observed recently. To begin with, the repercussions of all this money production are something about which far too few people are speaking. Consequently, we had a pandemic and a lot of individuals who were in need of cash. After backing up the trucks and distributing a large amount of free money, the government did what it was required to do. They provide billions of dollars in aid to firms that were suffering from debts, dealing with crisis, and generally in need of cash. Individuals who weren't working received tax relief for hundreds of billions of dollars. The government spends hundreds of billions of dollars on medication every year. To be sure, this newfound wealth had to appear out of thin air, but nevertheless, the Federal Reserve was able to produce it by printing money out of thin air. However, as anybody familiar with basic economic fundamentals will tell you, this isn't the case. If only printing money had no effects. Inflation is one of the most serious consequences of printing billions of dollars, because when you start giving people free money, demand for things rises, and consumers have more money to spend. They begin to ascend. According to Charlie Munger, if this trend continues, the United States will have hyperinflation like that in Venezuela. However, this is just one of the components creating inflation warning signs. Another factor is the aging population of the planet. We can clearly observe that in the 1970s, there were many more young individuals than older ones. Young people in the United States in the 1970s outnumbered pensioners by more than 2 to 1. As of now, it's almost identical in every area. It's the reverse of what happened in the 1970s in the United Kingdom, when the ratio of pensioners to young people was higher. There is a common thread running across the industrialized economies of the world. There is no growth in the working age population in any of the major countries, and China is actually shrinking, except for Africa, which is one of the world's poorest continents. None of the developed nations, Eastern Europe, or the former Soviet Union have anything to do with this. This loss is critical since fewer capable workers indicates a reduction in the quantity you can create. As a result of this, the cost of labor rises. As a result, companies that use labor have increased the pricing of products and services for customers. It's important to remember that these are only a few of the variables that might contribute to increased inflation in the future. The true question is, how can we profit from inflationary times, or, at the very least, not lose money? Because most of us have never had to deal with high inflation levels in our lives, the last time we saw substantial inflation was in the 1980s, and most people have no idea how to invest during these times. Inflation is a new phenomenon for us, and we're not accustomed to seeing the value of the dollar fall, the value of bonds fall, certain equities fall, and other asset classes fall. Asset types that perform well in inflationary conditions should be familiar to you. In my experience, one of the best ways to proceed is to purchase real estate and then supply this real estate, which results in my accruing substantial amount of debt, in the neighborhood of $700,000 in value. Let's have a look at the arithmetic to see what I mean. Cash is the worst asset type to have during periods of inflation, because clearly, your dollar is becoming less and less valuable. When it comes to money, what is the opposite of cash? Debt. Inflation, on the other hand, eats away at your debt rather than your savings. So, that's a benefit of owning a home. What happens to the value of your home? However, when you factor in inflation, it rises. Everything, including homes, goes up in price when there is an increase in inflation. That's a plus for real estate, but your rental income also rises with inflation, so that's a bonus. As a result, investing in real estate not only reduces your debt load, but it also increases the value of your home, which in turn raises your rental payments. With these investments, you're making money in various ways, and if you do this well, you may possibly earn a lot of money. Real estate investment trusts, or REITs, are now available to those who don't have the money to purchase property directly but still want to invest in real estate. Inflation isn't only a good time to invest in real estate. You may also make money via other investments. Gold is another asset that performs well in this market. Inflationary times cause investors to see the value of cash diminish, and thus no one wants to retain cash. So I thought, what's an asset class that maintains its worth, that has limited supply, and cannot be watered down in value, as well as gold as a possible solution? When investors detect inflation, gold's price soars. Looking back, the last time inflation was this high was between 1970 and 1980s, when it ranged from 5 to almost 15%. Gold's price plummeted like a rocket during this time period. Between $250 and more than $2,000, it jumped. During moments of rising inflation, gold is a powerful asset, but you want to acquire it when the price is still low. And sure, I, too, am a gold owner. Since Bitcoin has only been around for about 10 years, there's a lot of individuals that oppose this. And I know it doesn't have the test of history since Bitcoin has only been around for about 10 years. But, as I'll demonstrate, we have a logic here. As a result of inflation, your dollar is gaining value, as I said before. For the sake of efficiency, it is printed and bolted down. There are only a limited number of Bitcoins in circulation, so you can't dilute them anymore. A solitary 21 million pieces have been made available thus far. So, when the dollar weakens and loses purchasing power, investors begin flocking to other forms of money, like Bitcoin. Although there is no precedent to back this up, I believe that if we have hyperinflation, Bitcoin may take off. As a result, we have a real estate, gold, and Bitcoin, which are all inflation-resistant assets. In addition, you should keep tabs on the stocks that are doing well and those that aren't. This is why we're going to use Warren Buffett as an example, since he's spoken a lot in the past about stocks and inflation. High inflationary periods need to focus on equities since they have 3 significant characteristics which you may wish to note down. For example, you may make money rather than spend it. With inflation, 2 is the group of enterprises that are able to raise their prices quickly, and the third is by firms that are able to handle huge volume growth in their company with just small capital expenditures. Even Coca-Cola, one of Buffett's long-term investments, should be afraid of inflation more than most times. They have the ability to boost their prices in response to raising inflation since they are a well-capitalized corporation. Like Sanderson Farm, they can simply increase the price of chicken in line with inflation and maintain a healthy cash flow. If inflation is expected to be strong in the future, you'll want to put more of your money into these best performing companies. I'm not saying that rising inflation isn't bad, but as Thomas so eloquently put it, Hyperinflation may steal nearly every life savings without the government having to bother increasing the official tax rates at all. However, if you invest well, inflation isn't going to eat away at your savings. Indeed, you may benefit while others lose if you make sensible investments in the correct kinds of equities, gold, and real estate, as well as Bitcoin.